Imagine knowing exactly where to buy and sell. In this webinar, we're going to break down how you can follow big institutional whales and piggyback with them. You're going to learn exactly how you can find big orders come in and how you guys can take advantage of those moves and piggyback with them and see some decent returns. With that said, I have Anthony Stanford here with us. We did this webinar not too long ago, and it was amazing. More than 400 of you guys showed up. And today, we're going to hit it again, break it down in more detail, how you guys can find these big whales and keep track of them and even sell when they sell. All right. So, without further ado, we're going to dive right into it. I'm going to bring Anthony here. Anthony, what's going on, man? How you doing?
Oh man, I'm doing good. It's Friday. It's starting to warm up here. I'm ready for the weekend. How about you?
Great, great. It's Friday. It's 1 p.m. Eastern. Had Lotto Friday. Amazing day. Can't wait for the weekend. But I want to make sure all these guys here get the knowledge that you have and the knowledge that we have and give them some insights on how to make their trades better. Let's do it. All right. So we're going to dive in here. We'll start off with, I guess, those of you that don't really know what options flow is really finding what these big whales, where they're buying, where they're selling. And by big orders, we're talking anything, 50, 100, 150, 200, sometimes millions of dollars being put into these trades. And we're trying to kind of use options flow as a little bit of an indicator to be able to find these, piggyback with them, and make money with them. So Anthony's going to dive in and really show you some of the examples that he's seen in the last few weeks and what to really look for. How do we find them? How do we spot them amongst the ocean of all these orders coming through? How do we track them? And how do we know when these guys got out? Right. On top of that, we're going to tag team it. We're going to kind of combine technical analysis to not only give you, a reason to enter with technicals, but also have the piggyback and the flow behind your back to kind of give you the momentum and the move that you're looking for. Okay. So Anthony, I guess let's dive right in and let's start off with how do we find these big whales?
Yeah, so there's a couple ways you can do this. So obviously Unusual Whales, just for those that might not know, is going to pull in every option trade that comes into the stock market. So if there's a retail person buying one contract of, let's just say, Ford, it's going to show up in this feed. So kind of with Unusual Whales, the biggest thing with this is learning the filtering. So when you look at the filtering, and obviously, like if you look in here, so this is every trade that's coming into the market right now. So you can see this is our live feed, every multi-leg trade, every little single trade. So essentially what you're trying to do is kind of filter out the bad flow and find the good flow. So like me, I have different filters set up. Obviously, not going to dive super deep into the filters in here because that's a whole nother thing, but we're going to look at my ask side filter. So when you look at ask side and big bid side, and this isn't always 100% true, so kind of diving into the flow is key too, which I'll kind of show everybody to at a point here. But essentially, when you're looking at like ask side, you're thinking of them buy. So if you see ask side calls, they're essentially buying the calls. Or if you see ask side puts, they're essentially buying the puts. So like bid side, a little different here because they can be selling to open those contracts. So when you're selling premium, obviously, like if you're selling calls, you're kind of I always say you're neutral to bearish on it because that stock doesn't have to move and they can collect that premium. Theta is your friend when you're selling premium. So that's kind of a whole different thing. So I kind of like the ask side stuff a little bit better because they're kind of looking for aggression. But like this is our flow feed today here. So kind of just looking over this, like what I'm looking for essentially is I'm looking for these opening trades. So like this hymns one's not a good one because it's multi-leg, but like this coin one that came in just a little bit ago. You can see we had 1,300 contracts come in. So your volume's at 1316. So there were 12 other contracts traded on it on the day against 243 open interest. So looking at that volume to open interest is always one of the first things you have to look at. And bid ask too. So these were coming in a little. So coin obviously has a little wider spread, but you're coming in essentially at the ask almost here. So like we look at the flow here. So here is your coin put for the 37225 puts, and these things ran quick. I mean, 298, they're up at 521. So what I'm looking at here is this is that whale contract coming in. So you can see that 1,300 contracts. We have 1,000 coming in at the ask, 287 at the bid. And I will always kind of look at the raw flow. So this is one thing where a lot of people that post flow kind of don't always do. They'll just kind of post it. They're like, oh, it's ask side flow. It's a buy. Like, no, you have to come into the raw flow feed and kind of look it over here.
So just to kind of make it a little bit, more clear for some of the newer guys, I think when you talk about ask side and bid side, what he's referring to is if someone is being very aggressive and they want to buy calls, they're usually gonna just pay top dollar, right? When you're paying top dollar, you're going to the person who's at the ask, who's selling that to you, right? So what he's referring to is being at the ask and you're buying a call at the ask. Essentially, you're saying that, hey, I'm willing to pay top dollar to get into this position. So in a sense, it shows a little bit of aggression, right? So
correct.
if I want to buy, for example, a stock, and let's say I'm scared of missing the move, like chances are you're gonna smack the market order button, and the ask people at the ask are just gonna kind of sell to you. Same theory here. If they're willing to buy a put and they're being aggressive and hitting the ask, that means they're willing to pay top dollar to get into that contract as soon as possible. And this is essentially what this is right here.
Yep, 1,000% right. So I mean, obviously, some of the bid asks. I mean, you like to try to find the tighter ones where they're like 2 cents. Some of them they'll be like 30 cents, and I'm like, I kind of don't like chasing those just because you can kind of get hurt. But kind of looking at this, so the way I look at the flow, and I think I actually picked the wrong coin flow here. I'm gonna just pop back here, so just ignore me for a second because I had coin flow for this is the one that I was looking at here actually.
Anthony, how did you
So
pull up that window that has that big green spike?
so if you look here on the contract, if you just come down here, you just click on that contract date, it's going to pull in your flow right here.
Right, right. And
So,
for people that, you're trading stocks and options, if you look at this as a volume bar and you pay attention to that big spike, you can see in relation to all the other volume bars, somebody is coming in here very aggressively and just hammering that. So you can see the volume significantly spiking. The yellow line represents the average premium at the time of the volume spike. So if we're looking at this, the green volume spike is right there where that yellow line is. What's the premium there, Anthony?
so the premium on this one, so this whale bought obviously next week's 240 puts.
Mm-hmm. And
They got 779 contracts at 346,000 premium.
Yep.
So at 445 for a fill.
445 is the average fill. Now let's follow that yellow line and see where it goes up to.
Yep. They're running at 770 right now.
770. So you see, guys, that they got in at that point, and Anthony will explain shortly how to track when they exit, but there hasn't really been a spike in on the exit, has there?
So what I'm seeing here, so we had about, again, we'll just say 780 contracts, just make it an even number. So I'm seeing some bid side stuff come in here, about 186 contracts there, 115 there. So about 300 contracts right there. To me, it looks like they could be sizing out. So this is where I'm
Slowly
always
scaling out.
saying, yep, this is why I'm always like, don't always look at ask side stuff because the spreads are going to be massive on coin right now because IV is going to be up on there. People are just wanting to hit that ask. So that's why I'm like, you need to kind of look at that volume there. You can't just assume an ask side because you could just see a 500 ask side candle come in here. To me, that would probably be them passing the contracts off to somebody and or closing, but you don't get to figure that out until Monday morning when that open interest fully updates.
Exactly. And just as you guys see that big green candle there, being aggressive on the buy side, when the spreads on a stock on an option becomes wide, the fastest way out is to sell to the bids, right? That's why now those bars are highlighted. Half of them are red, or actually 80% of those, the other ones are red, meaning that they could potentially be slowly getting out of their position. But again, just like Anthony said, OI, which is open interest, will always update. What is it? 8:15, 8:30 a.m. the day before, the day after?
Uh, unusual whale. So it depends on your broker. Brokers don't always update immediately in the morning. Sometimes, I mean, I know like Webull won't update sometimes like until 20 minutes before open,
Mm-hmm.
but Unusual Whales, theirs update at 6:45 in the morning Eastern time.
There you go. So that gives you a little bit of indicator before market opens whether or not that guy is still in the contract or if they're still holding.
And the one thing I was going to point out earlier when I had that other coin contract. So when I'm kind of looking at that raw flow feed here, so again, have to look at the raw flow. You just can't go based off ask side, buy, bid side, sell. So like when I come and look at the flow here, so I always like to bump the results up so I can kind of see that entire flow feed. I come over here. I always like to see where that whale initially starts to come in. So I'm watching the IV. Again, I'm watching that spot, which is what the contracts are being filled at, and the bid ask, which investor touched on earlier, is the spread of the contract. So first I see, and again, this is a flow alert too, so this is kind of important to have rules on too. But you can see, right, when that flow starts to come in, big spike in the IV, spots coming in right at the ask. And let's go back here. And I will always follow the flow up no matter what. So let me come down here. So you can just see that IV staying the same. It's not increasing or anything. Little drops like this, I always kind of look at the size to see one contract that's not going to be make or break there.
Yep.
And you can see it's still coming in pretty much right at the ask. I'm following this spot all the way up, keeping an eye on that IV. We're coming up. So no major changes in the IV or anything. Spot price staying at the ask. To me, that's showing aggression. This would pretty much tell me it's a buy. Obviously, you can't 100% know for sure. Otherwise, we'd all be rich and millionaires. But kind of combining that with the net premiums here too. So net premium obviously will be on next to that chart there too, but you can see that red line. So anything above this little middle axis here, that zero axis, this is ask side. So you can see there's a lot of net put premium here on the ask side here, and that call premiums leaning bid side. And down here is just your volume for puts and calls. So you can see a lot of put volume, a lot of net put premium, net call premiums bid side, and then you have a short term whale there on the 228, 240 puts, which obviously you can see 445 fill. They almost about 80% right now within a half hour, 40 minutes.
What date did they open those trades again?
About a half hour ago.
Nice.
About 11:30 my time.
Yeah. And yeah, we'll probably find out. But I mean, at 80%, chances are these guys might be out by before the end of the day.
Especially with coin and its aggressive theta over the weekend.
Yep.
But yeah.
Perfect. So this is it's crazy. So that came in at around 11 o'clock. And
yeah, yep, about 15 minutes before we started our live.
Yep. So yeah, this is where you guys can catch these big flows. I think one way to catch these, what are some of the filters you're using to be able to kind of filter out amongst the big sea of orders coming in?
Yeah, so the one nice thing with Unusual Whales too, they do have some preset filters here. I obviously adjust mine a little bit, but you can kind of see big trades for ask big multi-legs, kind of just ask flow. They have some generic filters, but like the ones I use, they're a little more custom. So I'll pop back over to the ask side here and let me pop out of this and go to today. So like I have my ask side filters, my bid side, so I have them separated. So this would be my ask side one. So I have all my bid side stuff hidden. Mid side fills, I don't really care about mid fills. You can't
Hmm.
really tell how aggressive they are. No side, again, pretty much the same thing. If you don't know what side they are, it's kind of filtering out the junk. I'm looking for my chain activity. So since it's my ask side, I'd like to see at least about 70% ask side
Yeah.
fills on the chain, whatever's coming in. Obviously, I'm looking for calls and puts, stocks, ADRs. Obviously, this is all customizable.
Hmm.
I'm looking for a pretty high premium, and that kind of goes into market cap and all that too. Like 90,000 on Ford versus 90,000 on Tesla. There's obviously a big discrepancy in market cap between the
Yeah.
each. That's kind of where time in the market, and you're like, oh, 100,000 on Apple here, like 180,000. Like that's a decent trade, but I mean, like if this was like 180,000 on Ford, I'd be like, oh, okay, that's a huge trade.
Hmm. Hmm. Yeah,
And
that's those are good. Those are good things that you're kind of mentioning as well. He's again going after those aggressive moves on the ask side.
and size wise, I kind of want to see decent size coming here. 500 contracts, good starting point.
Mhm.
And I leave my pretty much everything else kind of open. Out of the money, I like out of the money just because in the money there's a whole different bunch of stuff you can do. You can exercise if you're
Yeah.
10% of the money and the stock starts going the wrong way, obviously stuff like that. And then I keep all my sweeps and cross trades and all that's pretty much filtered out. But I leave all that on just in case. Then
Mhm.
I just like the volume to open interest out of the money only. Aggregated trades. So that's just kind of, if you see these little white lines here, it's just going to tell you it's not a single transaction, but it's a bunch of several transactions at
Now,
once.
which tab is this on the Unusual Whales website? Is this the flow
So
alerts or
if
no?
so if you
The
come
flow feed.
into Unusual Whales, you go up to
Mhm.
flow data. This is the flow feed. So this is going to catch everything.
Cool. Yep.
And I know the one you were just asking about, flow alerts. So flow alerts, I like those too, but you're not going to catch all the ones that might not be a flow alert. So
Yep.
so a good thing that, because I know you use Unusual Whales too, you can come up here into, where's my set, the columns, and
Mhm.
you can put on, if you come down here, show if it's a flow alert. So then you have everything in here. Obviously, that's what that rule is here. So you can see the flow alert rules there,
Mm,
kind of get everything there.
perfect. It kind of combines everything in one.
Yep, it's really nice. They've put a lot of extra stuff into these columns, and these are all fully customizable. You can drag them how you want to show in here and all that. So it's really nice.
Perfect. Yeah. I'm just gonna jump in and kind of show you guys the filters that I use as well. Just so you guys know how there's like two ways to do it. This way is awesome. I think I'm gonna change to the way Anthony's doing it because it catches more stuff. But how I have it set up here, I'm gonna put my screen on. But essentially, how I have it, I have two windows. Okay, I call this one to the right big flow, and it's labeled as huge buys, and then I have this other one on this side as if my mouse would work, I'll show you guys. Oh, out of the money big. Okay, so essentially, what I'm looking for here is anything that's above 500,000. I want this to show up on this window, and anything that's maybe 50,000 and more, I want it to show up on this window. Okay. So this way I have them kind of filtered in two different windows. If in big order comes in, it stays on here rather than getting flooded with all the other above 50,000s. But aside from that, the filters remain the same. Like I have bid side hidden and I'm showing the ask side. Okay. In this one, since it's the bigger premiums, I'm looking at 500,000 and more. And the one thing I've added is date till expiry. I don't want to see far out expiries because we want to look for short dated at the ask aggressive moves so we can kind of piggyback with them. And usually they have the same logic as us, right? And I have out of the money only as well, just like Anthony said, because when you go deep in the money, there could be ulterior thought processes or motives that they're trying to exercise the contracts and whatnot. So I have two. I put them on my screen just like this. If my mouse could work, there we go. I have them like this. That way I can keep the bigger flow on top, and anything that's coming through more than 50,000 will show up here as well. Okay, so two ways you guys can do it. Ultimately, whatever fits your style and your trading methods is best. But test it out, play with it, see which settings you guys like to use. Back to you, Anthony.
So something I noticed for you, which might actually really help you out too, instead of having your two boxes like that, they have, I gotta find it. I don't use it because I have like 3 screens, but if you use your Superflow, like for you, if you wanted to do this, but I know you have more than one monitor too, but like let's say you wanted your flow alerts here. Let me find them here. So flow alerts 1, so you'd add that. And this is good for people that only might have one monitor.
Oh,
So you
no
can
way.
add
That's
in your
really neat. So you
you
can
can
have
add in your
multiple windows within a window.
Yep. So like for you, like if you had your ask
Perfect.
and bid side, you can just pop your filters in right
Yep. Yep.
right there. And then you
And you guys
got
can save your filters too, like how we have it saved. That way you can have multiple filters saved.
yep, which is very nice to have, especially if you want to switch between a bunch of filters.
Boom.
But I don't know if you want me to show some exits for some of these whales just so people can kind
Yeah,
of see
just
how
so now we know how to find them. We know, okay, we got the filters. We're gonna filter for ask side. We're gonna filter them for out of the money, short term, short dated expiries. We're gonna check, make sure that a lot of it is from the ask side and not 50-50 at least. Now we know, okay, these guys have bought. Now, how do we track it and say, okay, where are these guys gonna sell or where do we sell?
So there's a couple ways to track it. I think obviously having unusual whales is the best case scenario because you can get that visual. My tip and trick for everybody that might not have unusual whales and that might just be taking alerts off X or wherever. My best thing to do, every broker has this, and I will just show everybody, at least Webull. This is something I always tell everybody. If you go, let's say you're looking at the 600 puts here. Let's just say 10,000 contracts came in. I'll maybe put the volume above like 13,000 so I get an alert at least and I can be like, "Hey, maybe there was a big chunk of volume that came off." Then I get pinged and then if I want to look it up on Unusual Whales or if I'm following somebody on X that posted it, I can ask me like, "Hey, I saw a big chunk of volume come off. Can you see if that whale's still in?" So that's if you don't have unusual whales. I kind of always recommend that. Even I use it even with unusual whales just in case I have a different tab open. I always try to have as many safety protocols as possible there.
Mhm.
But so let me see. I'm trying to think of a good one here that I have an exit. So we had a spy whale from today actually. This looks like a good example. So we had this spy whale come in today. So you can see 5,000 contracts here plus another 2,000. So we're just going to say 7,000 here. Just make it easy and keep an eye on that volume. So 7,000, can see we have 1,000 there, 2,000 there, 2,000 there, 2,000 there. So roughly about your 7,000 right there. You can see I'm taking profits here about 529 from that 360. So again,
Crazy.
7,000
And
plus
and just like
7,000,
that, and just like
7
that, you found a whale that bought and is exiting their trades within the same day.
7,000 plus 7,000. There's your 14,000 ish. So I can
Yep.
guarantee if probably nothing else comes in on the day, this open interest will probably stay around this 930 ish area.
This is
So
this is a great example, guys. Sorry to interrupt, Anthony, but a lot of people get volume confused. Volume doesn't just have to be a buy, right? This specific person bought 7,000 early in the morning and sold 7,000. So combined, you have 14,000 contracts that got exchanged. It's not just one side or the other, right? If they buy 500 today and sell it within 10 minutes, then it's 1,000. They buy 7,000 and sell it within an hour, then it's 14,000. Ins and outs, everything that's exchanged will become volume. Your OI will tell you how much of that is still open, hence open interest.
And another good way to check this, so let's look at the raw flow again here. You can see as that flow comes in again, your IV jumps. You're seeing that ask side fill. You can see that IV pop a little bit more, that spot increases. So this would be considered an ascending fill. So again, showing aggression like you touched on earlier. And you can see it kind of might not be part of the trade because the timing's not all there, but you can see the aggression there. Now, when you look at the bid side, before we click on it, I'm going to make a good assumption that we're going to see that IV decreasing here and everything coming at the bid. So let's take a peek. And I'm going to probably look stupid here because it doesn't look like it's decreasing. I'm going to remove that time filter 1 second. So let's go down here from when it starts. So some flow there. So IV decreases once that bid starts coming in. IV is decreasing right here. You can see that spot decreasing as well. So IV pops a little bit there, but they could be getting out obviously on a small little dump there. So IV pops up a little bit there. And then here we are, that IV's coming up again there a little bit, but we're still seeing that kind of bid side fill. But that's probably why that IV popped a little bit there, because it looks like that spot increased. I'm going to assume that SPY probably 603.67. Dropped a little bit. Well, so it's not always 1,000% signs, but
yeah, and it seems like as you're moving up, there's more bid orders coming in too.
Yep. Yeah, so that's where I'm kind of getting that. They're probably selling that IV's increasing, but obviously with SPY being down, what are we at right now? I mean, we're still dipping, so that IV is going to kind of be up, but you can essentially see it at that first part of the flow. We'll come back down here because this is that kind of good example here. Where was it again? So 1330. So this is essentially what you're kind of looking for. Typically, this is how a bid side would look. I mean, that IV is decreasing, and then that spot would be decreasing. And I like how I said that it was going to probably be decreasing, and guess who was wrong? But obviously, IV is going to be up, especially when SPY is down almost 1.3% right now.
Now, what happens, Anthony? What happens when we have a situation where we're looking at that little green and red bar there, and it's some of it's red, some of it's green, half of it's white. Can we put any weight on that? Can we talk about that a little bit? Because that was something that I struggled with a little bit at the beginning, not knowing what that is.
So you're talking about the one on the right side here?
No. So let me show you an example, maybe on my screen here, and then we can look at it together. It is this one right here. So I'm going to put my screen up. This one right here. So maybe something like this, where it's like, a little bit of red, a little bit of green, and then the rest is all white in the middle.
So what I'll have you do, I'll have you click on that contract date and have you pull it up, since it's easily right there for you.
Perfect.
So when you look at that, so you can see, oops.
Sorry. There we go.
So you can see like that white line. So to me, you can see that multi-leg there kind of by where your cursor is right there. You can see that multi-legs says about, 100% there?
Mm-hmm.
So it's technically coming in as a no side. So then if you click on that white bar, it's probably going to say no side there. And then you can see it's a multi-leg trade.
I see. Okay, perfect. So again, it's not showing us any aggression in any direction, really. It's just a multi-leg trade that we can't really put much weight on.
Yeah, and the multi-leg stuff I try to avoid. I'm not a spread trader. I don't like to sit and try to digest spreads and like, oh, they're trying to do this, they're trying to do that. Like, no, I want something that's
right. Ultimately, we want to see, hey, are you putting your money where your mouth is, and how aggressive are you in doing so? Did you just put $2 million on a call that's going to expire in 4 days? Right? That's really what we want to find. We want to find aggression. We want to find at the ask confidence in putting their money where their mouth is, and we'll look at it. Then we'll look at charts and technicals and indicate, hey, maybe this is something we want to get involved in.
1000%. So that's why that IV was kind of increasing there too. You can see SPY still dropping. So that yellow line here is just showing you what SPY is doing. So that's why that IV's increasing there. Typically you wouldn't see that, but obviously SPY is still dumping on the day. That's why that was there. But I can probably almost guarantee you this whale's taking their profits here. And if you look at that on Monday, it's probably going to be about that 950-ish open interest or so. Could be wrong, and they're filling these at the bid and doubling down. You never 100% know until you see that open interest change.
Exactly. Now, Anthony, how do we obviously there's a lot of stuff that we need to keep track on, whether it's, hey, I got alerts here, hey, I got to remember this option chain. Is there a way that we can kind of save this like somewhere on the platform?
Yep. So the best thing, so what I do with any piece of flow that I post or whatever I do, so when you click on that raw flow feed, and I'll show you how to do it from the actual flow feed too. But when I look, because I'm obviously, this is my last step where I look at the actual raw flow. If you just come over here on the side, you click one of these, save to my flow. Your my flow's right here. And then it's going to save right up in here. So you can see that SPY put that I saved there, and it's
perfect.
So
yeah, this
earlier,
way you
obviously,
guys can build, a few, let's say you want to track this in the morning and see what the IV looks like. You can save it and have it there, and you guys can review it again in the morning. And if those guys who bought earlier are now out, then you can confirm that via the OI, and you can just get rid of it from your watch list and then start the day again and find something new. Right?
Yep.
Cool.
And
should we look at a few that are happening now?
yeah, you want to pull up the actual live flow feed and see what's going on?
Yeah, let's look at the live flow feed.
Yeah.
I got a few MST. Oh, wait, no, I got a few NVIDIA calls for 28 days out.
All right, let's take a peek.
For March 21st, there's 3.6 million on it, and then 1.1 million for NVIDIA.
So I don't see it on my feed.
Let me
see if you pull it up, I can take a peek at it too. And then
Oh,
NVIDIA, I know they have earnings next week, I believe, too.
Okay, hold on, let me pull it up here.
Let's take a peek.
My mouse is playing games with me today, so bear with me, guys. So yeah, these ones, it's a repeat hit descending fill. What do you think of this one? How would someone interpret this?
Do you can you maximize your screen a little bit there for me?
Yeah, let me see if I can. My screen is so big, it looks kind of small here.
Or at least if you read me off the expiration, I can type it up and pull it up on mine too.
Can you see it better now?
Yeah, let's see.
All right, so it's the March 21st expiry.
Okay, so that March 21st, 145. So March 21st, 145.
Yeah,
so I'm in the contact. Oh, go ahead. Sorry.
Yeah, the strike is 145 call. Yeah.
145. So good find here. So that multi-leg, that's probably why it didn't show up on my feed, because it's 24% multi-leg. But let's just look at it for the fun of it. So let's see. Let's see. So this is where our flow starts to come in. So that IV decreases here. So obviously with earnings coming up in 5 days too, there's probably a bunch of stuff going on. Who knows, hedging, whatever.
Yep.
But
that's another thing, guys. You can't just take it for what it is, because you got to look at earnings around the corner too, right? So if earnings is there, God knows what their thought process is. So you want to make sure you know when earnings is as well, and kind of potentially stay away. I usually don't like taking trades or positions that I know earnings are within the next 2-3 days. But that's something that, Anthony noticed, and he says that earnings around the corner, usually some funny stuff happens on the flow. So probably staying away from that would be best.
Yeah, especially with the IV change, usually after earnings, you see a lot of contracts get clapped.
Mm-hmm.
But yeah, I'm looking at this.
Let's
go ahead. Sorry.
Yeah, I was gonna say, why don't you pull up the flow and then see if you can find something interesting and kind of walk us through it.
Yeah. Yeah, let's pull it up here. So let's see. Let's look at these Netflix calls that just came in. Oh, no. Okay. Mara multi-leg. So I don't want to avoid that. So you can see right away it's a multi-leg trade. You can kind of see it over here too. It's going to tell you the code and all that. It's a little newer there. They just did that. Okay. Let's look at these BPs. They came in as a single leg contract. So these 321.35s. So these
Perfect.
are coming in above the ask. So right away, I'm like, hey, this is really interesting. Big premium, big size.
Above the ask, guys. They're not even hitting the ask. They're going higher than the ask.
So 28 days. So I'm thinking, okay, this whale's probably a little more maybe mid longer term there. That's kind of how I
Mhm.
base it off the days to expiration. Doesn't mean you need to hold it the full time.
Right, right.
Big spike in that net call premium. Call volumes up. Sometimes I'll take a peek the last 7 days. Not a lot of volume, a lot of just kind of mid stuff. Big spike there back on the 13th. Spike today. Let's look at the raw flow. So this one, so this is a floor trade also. Well, coming in here, obviously you can see that timing's pretty much all the same. Right away, right when that floor trade comes in,
Mhm.
jump in the IV, again above the ask, and then the rest coming in at the ask here, and that IV drops a little bit here, but that floor trade is what I'm noticing there is the big factor. And this could be people tailing it that also have unusual whales. Obviously we don't know for sure, but to me this would look like a buy, and this is something that would interest me because it's coming in above the ask. Now the one thing with floor trades, I don't know why with that, I noticed not all the time, but a lot of the times they'll get modified or changed. So I kind of, before I take them, I kind of just monitor them just to make sure it sticks. And you can
Mhm.
always just check that if you just come and refresh it in 5-10 minutes
Yep.
and see it. If there's one that's crossed out, let me see if I can find one that's crossed out. Let me just come back here and do floor trades only. So let me refresh. So there's probably not going to be any today, of course, because I'm trying to find an example. To do the last 7 days and just find one. So it doesn't happen all the time, but like right here, you can tell this one was canceled or modified because if you just come over here, you see that little red strike through it. So
Mm.
these trades are struck out, have been canceled or modified. For some reason, I noticed it's a lot more with floor trades. Obviously, not right now because I'm showing an example. So,
Right.
but yeah, so I mean, that's one thing I try to watch with floor trades just to kind of make sure it's there. Obviously, they are
So
just
these
like,
BP guys, they came in with what was it, 830,000?
let's go back to it 1 second here. Let me pop
I
that
think I
out.
saw 830.
Back here. Where's my ask side? So those BPs. So like, and not to change the subject quick, but like this wouldn't show up in your flow alerts because it doesn't count as an alert because it came in as like one big singular trade. But yep, these came in 11,145 contracts above the ask at that 76, so 846,000. That's pretty big
Perfect.
premium.
And
Looks
let
like
me
it's
let me
already.
pull up a chart and I'll show, I guess, the idea behind what they're kind of doing. So they had earnings the other day, but one thing, if you take a look at the 1 year, 1 day, take a look at this huge volume spike, right? So on this gap up, there's so much buying pressure here. It's the most volume the stock has seen in the last year. That's one thing. Now, obviously, that has to do with some positive reaction to earnings. It's gapped up. All the moving averages are crossing over now. And it looks like it's been kind of plummeting for a while now that it's kind of reversing upwards. A lot of the times, these option flow guys, I find they really lack technical knowledge, right? They're just kind of putting their money, they know something, or they're putting their money on some time, and they understand like in that time frame, the stock will potentially make that move, but they don't really have the exact technical reasons to enter. I find now with this one. Obviously, you have a lot of buying pressure. You've gapped up. The stock is pulling back, and now they're putting around 830,000 of their money on the line. But why, right? So this is pulled back. They're probably basing it on the fact that we have positive reaction to earnings, huge buyers coming in. Usually, when you have a gap up on earnings and you pull back, moving averages and everything is crossing over the longer term downtrend, this is possibly going to do this and continue higher. That's probably also why they bought the 28 days out, to give it time to do the consolidation and ideally get back up here. Right? That's the theory, I think, there. Now, as for you as a trader who's looking at this, you want to look at the chart and start drawing your levels, right? So if this price is here, you have your supports down here. That's an area you could potentially look to buy this. And then you have your resistance here, which lines up with these pivots here. And above that, you got a huge move to up here, right? So I would potentially kind of know that the options flow is there, set some alerts down here at 33.24, see how this candle reacts. Do you get maybe like a hammer candle off of the low here? This way you have flow, you have positive earnings, you have a candle indicator on the daily, you have 200 moving average as support. You have lots of things in your favor. Then you can kind of put your money there as well and kind of piggyback with it and make the move, right? You always want to look at the technicals as well, because you never know what their risk tolerance is. 835,000 that they've traded, maybe they're willing to lose it all, right? But if you trade and you take that trade with, let's say, $1,000 and it pulls back 20, 30, 40, 50%, are you willing to sit through it? Chances are you're not, and you might cut the trade, and that's when it's going to bounce up. So make sure you look at the technicals as well and give yourself a little bit of a edge, more than they have, but use them as the fuel to kind of get you going to where you need to go.
Yeah, very, very great breakdown. And adding on to that, I'll give you a little tip that I like to do. So when I see this flow come in like intraday, it's very rare that I'll take just random flow that comes in. Like that coin flow that was 7 days out. If there's something that's like, I mean, or 0 days, if you see something come in for 800,000 that expires today, I might throw a little money at that just to see what happens. But something like 10, 15 days out, what I like to do, so if you come into the options screener here, obviously they have different setups. So this used to be the old hottest contracts and all that. What I like to do at the end of the day is see what like the hottest contracts, the highest premiums are on the day. Kind of look through that, look through the ask, ETF, bid side stuff, and then I know like what's coming out economically on the next day. Like if there's CPI the next day, earnings for a different company that might impact that certain company. Like a good example I have here is back from 212 actually. So 212. So I saw these 328 415 Microsoft calls coming in at 962. And I noticed they were down a little bit from their entry. So I know they didn't make a huge intraday move. So like if these were like $12 a contract, I'd probably pass it. Like, okay, it made a move already. I'm not willing to chase that. I can see it doesn't overlap earnings. So if I look at the flow here, and let's go back to the 12th. So if I look at the 12th, this is how it all came in. To me, it's a lot of ask side flow coming in here. Not a ton of volume. So this is kind of where I like to combine multiple data points. So I'm seeing all this flow come in here. So a lot of ask side flow. And I want to pop this back to today now. So this is from last week. And I know me and Stoner Man, I don't know if he's in here in the chat somewhere, but me and him were talking about this yesterday. So this was our whale here on the 12th. And you come down here and look at that. So only about 600 contracts traded there on the 12th. Not a full amount of them carrying over, but enough where I'm like, okay, I like this. So now this is where your charting will come in, and I'll touch on that in a second too. So you can see most of that volume staying here. Now on the 19th, which was 2 days ago now, and then the 20th, you can see that volume picked up here. That open interest didn't change. So this is telling me that these contracts may have been passed off to somebody. So that's kind of the issue with not seeing a lot of volume on something. You can't, it's a little harder to track, but like with this. So what I do and anybody else can do, I'm just gonna, so I like this. So like I noticed there were multiple ask side hits here, and you can see that here. We look at that net call premium. So lots of spike or big spike there on the 11th there. And you can just see, I mean, everything above that middle is ask side calls. So not seeing a lot. So bid side calls there. And then when I looked at the chart, so that chart actually looked really nice. So when we come in here and kind of looking at that expiration again a little longer. So I want to bump this out to the weekly just for a little better example. So you look here, almost a lay up here because actually the daily looked a little better. Sorry. So we come in here. We can see the 12th right here. 12th, I said we were in this little demand zone area.
Mm-hmm.
Good support demand zone. I was actually looking for, let me pull it up here. So I was looking, where was I? So had resistance. I had it 419.50 at that 200. And I mean, we got pretty close to that, man. But from that 12th up. So this is why I like kind of combining that flow with charts too, like Investor was saying. Because I mean, you had almost a $10 move here, and there were a bunch of people talking about Microsoft yesterday. Well, look at Microsoft today. You would have chased and got clapped. Because then that's where, like, if you see the ask side flow coming in, IV's up on Microsoft on the day yesterday. People are selling at the ask because everybody's asking the price for the contract. So it's kind of where kind of digesting the flow matters too there.
I agree. Can you talk about that little the net call and net put premiums a little bit?
Yeah.
I forgot about that actually. It's a pretty cool thing again there.
So there's two things. So you have your market tide and then you have your net premium. So again, another good way to kind of find trades also. But so your market tide, this is all option flow in the market. So right now, and this is live, and you can obviously bump it down if you want like 30-minute intervals. I like to just leave it on the day. But again, I mean, depends on if you're scalping, whatever works for you, obviously. But this, so anything again above this little axis, this is going to be ask side put premium. So right now we can see it's ask side put premium, bid side call premium, a lot of put volume coming in here. So this is for all. So this is including in the money, everything. You can look at out of the money. So again, you can see this kind of matches. So that's something I'm looking at. I like to see them both kind of matching just so you want that dual sentiment essentially. So this is for everything. This is every stock, ETF, index, everything.
And the green line represents?
So this would be calls. So your net call premium here. Yep. So we're pretty heavy bid side calls right now. And I'll also kind of like to bump it out just 7 days. See on a daily view and a big long overview, like, because we could see a small spike on that, let's just say the out of money puts, and we could be way down here, and there could be a huge day of call volume before. So I mean, I kind of like to get that whole like week well, I already know what it is kind of before what we're going at on the day, but you want to see that whole sentiment pretty much.
Cool. So let's look at it on an actual stock and see what it looks like there.
Yep, perfect. So if you come in here, let me come in here. So if you just go into your overview, pick a stock, stay a stock. I don't care. Let's do AMD. I don't know why I like AMD. So good one here. So you can see AMD opened up a little ask side call, ask side put. Had that, both of them kind of spiked here about the same time. Calls were up a little bit more, but you can kind of see how that yellow line, which was the stock price, kind of following them, kind of choppy at first. So anything above that line, if both the call and put premiums are above that, I'm kind of leaning it's more mixed, could be choppy. So you can see it was choppy out of the gate.
Right.
And we can see that. And people look for this crossover here usually. And obviously in live time, it's a little harder. Like, oh, hey, it might cross and then drop right again. So
Right,
it's
right, right.
easier to show like when it's done,
After
but
the fact, of course.
yeah, it's usually always after the fact on X with everybody.
Yeah,
But
yeah.
yeah, you can see those net call premiums kind of starting to tail off. Then we start dropping bid side. So people are dumping their calls essentially. And you can see that
Yeah.
put volume staying up. That put
It's
or that-
really important to kind of understand the bid and ask in this sense, because when you're looking at this, you see the green line being calls and it's above the zero. They're saying the calls are hitting the ask, right? So they're again being aggressive on the call side. And then something happens, a shift in momentum happens. The puts are now getting hit on the ask, and the calls are starting to hit at the bid, meaning they're exiting those trades. And then naturally the calls are dropping towards the bids, and then the puts are jumping up to the ask. If I repeat that, it sounds really confusing.
yeah. Well, and like limitless, he's really good at this. He actually just made a good point about that negative volume. So like you start seeing that negative volume with that ask side puts kind of being
Mhm.
up there. You can see that picking up. That's kind of giving you maybe a idea of what's going to happen, especially when you see that call premium dipping into the bid.
Yep, yep.
And
Cool,
the
man.
other and the
This
one
this is
other
all awesome stuff. This is all awesome stuff, I find.
oh,
Do
I
you
know there's
wanna
so
did we
much.
go over something you found, maybe last week?
Yeah, let's take a peek last week and see. So actually, so like these Uber, so we'll go from the 8th. Okay, well that was Tuesday technically.
Mhm.
Um, so let's look at a call cell because we don't really touch on those that much. So here's your call cell. So we had 1,300 contracts come in at 475. Looks like they hit a low of 390 today. So again, when you're obviously selling calls, this person's a little longer term. They're probably trying to collect premium over
Right,
so
right. Now
long.
notice that spike, guys. That spike is different from the green one we had. This is a bid. So they're buying calls, but they're hitting the bid. That's why that is showing up red like that. So they are selling calls on Uber.
Yep, yep. Perfect. So then obviously, like I'm always saying, look at the raw flow because not everything bid will be a sell, but
Mhm.
come in here. I'm waiting for them to make this so it stays default at 250 for anybody that's unusual whales in here. Let's see. Sometimes it'll be goofy like that. I got to go back in here. Sometimes if you look at something that's 7 days out and try to go back, it might kind of mess up a little bit. But good example here. We're looking at that IV again, that ask side or bid side here. You can see I'm always looking for ask side because it's in the memory there. So again, bid side, we're looking at that IV. Again, that small little pop in that IV there. Obviously, one contract, not going to throw off the whole thing. Now, if it was like that 270, I'd kind of maybe step back, think about it, look a little bit more. So we can see we dropped again there. So that overall IV again continuing to drop. Again, all bid side. So this looks like a sell. And we can see 475, they're running about 390. So this is kind of why I always say too with like the sells, they don't have to like this would be neutral to bearish to me.
Mhm.
Uber can stay at 79 for 80 days and this whale's going to make money because Theta's their friend on the contracts.
Exactly. Exactly. This is where really, you know, people get in trouble trading flow because they don't really understand the bid, the ask, the mid, the multi legs, and they're just kind of doing it blindly, just like anything. And you're looking at a chart or your stock and you're trading it blindly, you're going to get into trouble. But really understanding, are they buying a call or put? Is that at the bid and ask? At least puts you in the right direction or thought process. Again, it's not 100%, but at least you're getting the right guidance this way to know what they're possibly looking to do, right? If they have 85 days out and they have a call and they're hitting the bid, just like Anthony said, chances are they're probably selling calls, right? They want this stock to either go sideways or go down because they probably have a position at that strike that if price goes sideways from or navigates away from, they're still going to make money.
1000%. Yep. So another interesting one here, we had that other Uber put. So like we had an Uber put on the same day, then we had a Uber call sell. So I mean, you're kind of getting that idea. They were like, hey, maybe people are bearish on Uber now. But like this one's an interesting one because I know you were talking about that no side a little bit earlier. So we look at this one. So 6,400 contracts, 170 for 1.1 million. Then we have 64 and then 6,100. So coming down here right away. So to me, so about 12,000, we'll say. I mean, most of that carried over. So interesting here because if we look at the no side, I kind of want to take a peek at it. So that's kind of weird that it gave me a no side there because I mean it's almost at the ask. Came in as a cross trade. So cross trades are a little different too. It's different. It's going between a bunch of brokers and all that. So that's why I kind of typically will avoid it. But that one's interesting because you had 6,000 come in and that volume did carry over. Some multi-leg, but that could be in here now as well too. So that's interesting to me. But again, that's why I'm like, you need to look at the flow because it's this whale to me, it looks like they added that position. And I mean, you can see they're running at 220 now from at least that original 170 entry. But like if I was chasing this whale and you're chasing something intraday and following this whale and you see this spike of no side come in and you're, let's just say 300 contracts deep, you don't know what they're doing until the next day. Like if I saw the no side, I'd be like, oh crap, are they exiting? What are they doing? And then you might sell for a loss. And then you look on the next day and you're like, oh, it all carried over. So that's kind of why I'm like, sometimes I'm like, I don't want to take flow intraday. I like to kind of wait for everything to settle after hours. I can chart it out and then I can find my perfect setup and all that.
Yep. Cool, man. So, I mean, we talked about how to spot them, how to filter out the noise, how to find what we're looking for, then to dive in to see, hey, is it bid side, ask side? What are the chances of it being something that we're looking for? And then, of course, as always, pull it up on your charts, guys. See if you can get a little bit of a better advantage or better entry than they have. And then you can kind of put it on your watch list, put it on your save list on unusual whales, track the OI. If you don't know where to exit, I mean, technical should usually tell you where to exit, but if you don't know where to exit and you're really just relying on the whales, at least you can use OI and open interest to see, hey, did those guys get out? Keep tracking that strike and expiry so you know really what's going on. And other than that, yeah, I think this is a great tool. Anthony is a whiz at kind of filtering this stuff out and keeping track of this stuff. And yeah, man, anything else we missed, we forgot to discuss, Anthony?
I do want to touch on one thing too, where
Yeah.
you said about following the whales. This is a perfect example right here. So we had these Google calls come in on the 18th, 6,000 contracts, 328, 1.9 million. These ran and hit a high of actually 480 yesterday on the 19th. That whale hit about like 45% there. Math might be a little off, but can see they held. They opened, let's see, about 413 today. So they were still in profit, or yesterday, the 20th. Opened still in profit. Kind of came back up, kind of chopping about that $4 price per contract. And now look today. So again, 6,000 contracts. Look at our volume today. To me, it looks like this whale might be exiting at about $2 a contract. This is why I'm like, you don't always have to follow these whales. Don't follow them off a cliff. You need to have your own kind of trading method and all that.
100%.
If you're up 46% on a stock and you let that go red, that's
if you're up 40-50% and you have not scaled, you don't have a trading problem. You have an emotional problem. You have a psychological problem and you got to address it. So you got to size down. You got to figure out a way to scale out of your positions when you're hitting 40-50%.
And there's
these are
always
all tools. These are all tools to get us into looking at something, get us to start thinking about buying something, get us to look at things and study it before we enter. But once we enter, we really have to use common sense and saying, hey, I'm up 50%. What do I do here?
And there's so many times where I'll see whales that are up 80% and the contracts go negative, and it's like if you're following them, I mean, they're people. Like, you don't know what they're doing. They might just set $1,000 or 7,000 contracts on something, close their phone, and not look at it for a year, and they come back and they're like, "Oh, hey, I'm down 80%." Whatever.
Yeah.
Like, you don't know exactly what they're doing.
And I've said this before, and I continue to say to this day, these guys that are putting in this much money on this, they have, money is relative, right? So if they want to have a tax write-off of a $500,000 loss, they'll just buy $500,000. Hey, if it goes zero, great. I have less to claim, right? The logic and the theory is a lot different from what they're looking at or what they're trying to do than the average person. So we have to be worried about our pocket and say, hey, we did our due diligence. We saw that they put in size. We understand what they're thinking. Let's try to piggyback with them. If we see our money, we're going to run. We don't necessarily have to wait for them to exit, because OI is going to happen after the fact too. If you're waiting for that OI to present itself, it might be too late. So do your trades, understand risk management, make sure you're taking profits on the way up. And everything we do here is to provide you guys the tools, the education, so you learn on how to enter, how to exit, and get a little bit of an edge in the market. But ultimately, the mouse is in your hand, and you have to press sell when you have the profits.
And then adding on to one more thing with that, I know we were talking about this earlier. Even like for me, because you see a lot of people posting, "Oh, I hit 300%, 200%." That's usually unrealistic. That's usually if you get a big gap in a stock or something. But if you are, I mean, personal level, if I'm up 10%, I at least have my stop set at break even. 10%, if you keep compounding at least 10% trades, they're not huge, but 10% over time, you're going to grow your portfolio. You will be happy.
100%.
And I mean, like, even for the flow, like when I'm taking flow, I like at least 10-15%. So I'm kind of looking for flow that's going to probably give me that. But that doesn't mean just because it hits 15%, like, oh, it's not 30%. That's not a good return. I'm having stops on. I'm adjusting up. I'm at 10% break even, 15%, 5%, 20%. I'm at 10%. I mean, you just keep manually moving it up. Or if you trailing stops, obviously, bunch of tools to do that.
Exactly. And 10, 20, 30% will come far more often than you guys holding the bag to 300-400. I hope you guys found some value in this, man. We're going to try to do more of these. Maybe we'll focus the next one on more technicals. But I hope you guys found value in this. You guys know where to find Anthony and myself. If you have any questions, reach out to either one of us. We'll be more than happy to help you guys out. We've hit a viewer count of 685 people at its peak. Congratulations, Anthony. We doubled what we did last time nearly here.
There we go.
But this is awesome. Thank you guys all for tuning in. As always, enjoy your weekend. Be safe and have a wonderful time. Anything else? Any last minute words, Anthony?
Hey, just thanks for doing this again, man. Your technical analysis is always spot on too. So I always like getting into that. I want to do one where you touch on the strat a little bit too, because that is always another interesting aspect for me too.
There we go, man. Awesome. Thank you guys all for tuning in. Have a wonderful weekend and stay safe.